European earnings tell you so far about what the economies are doing here?
Well, the macro picture is not as strong as I think most of us would have hoped at this stage. We had an initial flurry of optimism at the start of the year when it looked as if growth was going to be coming back pretty firm. But over recent months, some of the momentum has faded, and I think that's added to that, of course, you have some geopolitical concerns. So we've seen equity markets, certainly at the end of the last week, taking a little bit of a hit on that. So there's, I think the sort of macro backdrop is a bit of a concern for corporates, but at the same time, you've got a very easy borrowing environment and more borrowing, I think, more easy borrowing terms to come later in the year. It's matching up the sort of momentum behind activity and improved credit outlook and deciding how that pans out best for the businesses in the region.
How damaging is the situation between the EU and Russia's economy, and how damaging could it get?
Well, it's interesting because the market response to the sanctions that have been imposed so far has been relatively muted, and today the EU will decide on, will specify the names of individuals and possibly companies that will be affected by enhanced sanctions. But they've really avoided so far taking that step towards phase 3 sanctions, those measures which would affect whole sectors, for example, defense, energy, finance. I think going back a week ago, that was the real concern amongst many investors. But as long as we don't see those sorts of sanctions being imposed, then the view seems to be that the impact is going to be constrained just to Russia, Ukraine obviously in recession as well, but the broader impact for the euro area will be very limited.
So based on what you're saying, it looks like investors will just continue on steady as she goes, as opposed to any kind of big move on the markets.